The Fast and the Furious is a movie about street racing. One of the main characters is Brian, who's a cop. He gets involved with a crew of street racers led by Dominic Toretto. In one scene, Dom is teaching Brian how to drift a car. He tells Brian to turn the wheel all the way in one direction and then let the car do the rest of the work. If he doesn't let go of the wheel, Brian will crash. So it is up to him to decide whether or not to trust Dom's instructions and let go of the wheel. This is a metaphor for trading. 90% of traders lose money because they don't know when to let go. Some hold on too tightly to their losing positions, while others sell too quickly on their winning trades. Both are destructive habits that kill trading results. I am a professional actor and an award-winning filmmaker, and in this video, I will teach you when to let go and how to fix your trading so you become the 10% that makes money. I discovered my passion for trading during the 2020 lockdown when I had more time than usual. I started trading full-time in 2021 and have been profitable ever since. Since then, I have taught over 75,000 traders through my social media channels and helped them to achieve their financial goals. My mission is to make you the 10% that makes money in trading. Let's start with understanding why 90% of traders lose money. First, we have to understand human psychology. You are not a robot. You are a human being, and human beings make mistakes. We get greedy at the worst possible times. We panic and make stupid decisions. But if we can control these things, we can be the 10% that succeeds. The first reason 90% of traders lose money is because they trade emotionally. When I see new traders come into the market, I see a lot of anger. There is a lack of acceptance. They want to beat the market. They think they can, but they cannot. You cannot fight the market. You must adapt to it. If you try to beat the market, you will lose. You have to accept the market as it is and work within its rules. You can then take advantage of the market's power rather than trying to beat it. Trading without emotions is the key to success. It is difficult to do this alone. However, trading with a community of like-minded individuals can help. I have a community of more than 50,000 traders, and we share our experiences together. You can find more information below. The second reason 90% of traders lose money is because they are often misled by false gurus. I have seen many fake trading gurus who just want to take your money. They tell you things like buy Bitcoin now or else you will miss out. These are dangerous and reckless things to say. Trading is a journey. There is no one-size-fits-all approach. Be aware of those who want to take your money. They are everywhere. Also, many fake trading gurus only talk about wins, but never losses. It's important to remember that losses are inevitable and no one can guarantee profit in trading. So always be careful. The third reason 90% of traders lose money is because they use leverage. Leverage is like borrowing money from the bank. Now let's look at 4 reasons why you might succeed in trading. First, we have supply and demand zones. Supply and demand zones are areas where buyers and sellers are willing to trade at a certain price. They are shown on the chart as horizontal lines. When price comes back to these zones, there's often a lot of volatility and big moves. This is because there are lots of traders waiting to buy or sell at these levels. So if you want to make big profits in trading, you need to learn how to read supply and demand zones. The second reason you may succeed is because of fair value gaps. Fair value gaps are areas where the price is trading above or below its average value. They are shown on the chart as vertical lines. Often big price movements happen around these areas because there are many traders waiting to enter trades at fair value. If you want to make big profits in trading, you need to learn how to read fair value gaps. The third reason you may succeed is because of volume. Volume is the amount of money being traded in a particular market. It is shown on the chart as bars or candlesticks. When volume is high, it means that there is a lot of interest in the market and prices tend to move faster. When volume is low, it means that there's less interest in the market and prices tend to move slower. You need to learn how to read volume if you want to make big profits in trading. The fourth reason you may succeed is because of order blocks. An order block is simply a group of orders placed by a trader. They are shown on the chart as rectangles or boxes. Order blocks can be used to buy or sell an asset. If you want to make big profits in trading, you need to learn how to read order blocks. Now I will show you how to fix your trading so you become the 10% that makes money. I will give you 5 simple tips that you can start using today. Tip no. 1. Stop trading with your emotions. Easier said than done, right? Well, here's a hack. Try implementing a risk management plan. A good place to start is to risk 1 to 2% of your total portfolio on each trade. That way, if you have 10 trades and you lose 50% on each one, you still have enough money in your account to keep trading. Tip no. 2. Learn how to read supply and demand zones. You can easily spot these on a chart. Just look for areas where there are big wicks on the bottom or top of a candle. Once you have identified a zone, wait for price to return to that zone before entering a trade. Tip number 3. Learn how to read fair value gaps. Fair value gaps are areas where price is trading above or below its average value. You can easily spot these on a chart. Just look for areas where there are big wicks on the left or right of a candle. Once you have identified a gap, wait for price to return to that gap before entering a trade. Tip no. 4. Learn how to read volume. Volume is the amount of money being traded in a particular market. You can easily spot high volume on a chart. Just look for areas where there are big bodies on the candlesticks. Once you have identified an area of high volume, wait for price to return to that area before entering a trade. Tip number 5. Learn how to read order blocks. An order block is simply a group of orders placed by a trader. You can easily spot these on a chart. Just look for areas where there are big rectangles or boxes. Once you have identified an order block, wait for price to return to that order block before entering a trade. As you can see, reading the market is not difficult once you know what to look for. If you want more in-depth training, I have a free masterclass. You can find more information below. I hope this video was helpful. If it was, please leave a comment below. Thanks for watching.